What's your sense of how July will, pan out from here? Because this was a month where there were so many cues which were stacked up. You have earnings, you have a credit policy next week.
So the way I would look at it is that I think the Nifty needs to consolidate, but we've been seeing a lot of sell pressure emerge in the frontline larger cap space and on the Nifty above the 5400 mark. So I would tend to believe that at least taking into mind the near term, this expiry view, the Nifty will find it hard to move above the 5400, 5450 level. But on the downside, we clearly think 52, 5250 on the Nifty is a very, very strong support level. So I would think the Nifty should continue to trade in this band. But like I've been mentioning before, we're not paying too much attention on the Nifty. I think it's more a stock-specific, sector-specific game near end. And most importantly, I think with expiry coming around, the market is poised to cool off or, correct a bit before continuing its upward trend. So I would think the market should be flat to slightly negative from here on in on the Nifty. But sector-specific and stock-specific, we continue to stay bullish.
Gaurav, afternoon. Are you moving to cash though then?
No, not as yet. I think it's still too early to, take an aggressive cash call. I think what we've actively been doing is rotating. Two sorts of rotation within sectors and rotation from market caps, moving from the larger market cap stocks that have done well to the lower market cap stocks, to the mid cap space, and moving out of sectors like IT, buying into sectors like real estate, metals, infra. That's the sort of strategy we're doing, because a lot of these sectors offer very limited downside. So in a way, they're protected, but I still don't think it's time to, aggressively start taking a cash call.
Gaurav, you were referring to the entire real estate pack and how you see, as a sector that you like. Does it still offer some buying opportunities? Because all these stocks, something like a Unitech or DLF in the frontline space, have run up quite significantly in the month of July. So at a price of 85 or for a DLF at about 320, would you still be a buyer there?
Oh, definitely. I think real estate is a sector that had got so beaten down, and more importantly, had become so out of flavor that if you actually looked at it, whether you looked at domestic mutual fund portfolios, whether from talks with our overseas investors, we looked at what they were holding. No one really owned this sector. People had gotten out of it. There were too many concerns, interest rate concerns, whether the recovery on the ground is really happening. So I just think that it was just very excessively underowned. From what our analysis says, we actually see a huge recovery taking place on the ground. And, we're seeing sales actually take place. We're seeing companies, speak more positively about, expectations in quarters ahead. So I just think that this is, in my opinion, at least in our opinion, this is the beginning. And it's definitely not late to enter. But be stock specific, because, there is a wide array of companies in the real estate space. We'd like to stick with the bigger names, with the better quality names, and more importantly, companies that are more in low-cost housing versus commercial development. But we clearly think this is a sector one has to be looking at right now. And interestingly, after Infosys' results, just as in terms of flows, we did see a lot of money move out of IT and, start moving into underperforming sectors like real estate and metals. So I would think that there's definitely a floor in place in real estate. And to me, this sector offers way much more upside than downside from here.
Gaurav, what's happening with these oil marketing companies, and how have you guys been approaching the correction? I mean, have you been buying in, or do you think enough is done and said on these stocks?
No. I think, the oil and gas space is it's like a game-changing event for this sector. Again, this sector is massively underowned, let alone the rally that we've seen take place from the lows. And investor interest is back. Globally, these are probably the cheapest oil and gas companies you're getting. And now with a little bit more clarity on this policy overhang that these companies face, we're definitely seeing strong, long-only money looking to increase exposure here. And this is very strong, sticky money. So I don't think, this is a story that we think is anywhere near its end. We remain buyers of the oil and gas space on every dip or every decline like we've been seeing. But this is a sector that is volatile, and hence, we just don't think we're in a heady hurry to chase or to get our exposure up, immediately. We'll take our time, we'll buy into dips, but this is something that we're only actually looking at for really long-term investors who have the patience, not really from a momentum or a trading point of view. So for the really long guys who have a clear clear understanding of what value is, this is a sector that we are adding on every dip.
The numbers which are now flashing on your screen are the quarter-on-quarter comparison, and those numbers are comparable, and Zee Entertainment has now dipped into the red, so currently showing you a downtick of about 0.2%. But Gaurav, your thoughts on the entire banking space? Tomorrow we've got important ones from Kotak Mahindra Bank and even Yes Bank, and up until now the numbers we've seen were either in line or better than expectations. What are you expecting from the entire banking space now?
So I think the banking space has done what the market expected. More importantly, I think the banking sector as a whole, YTD on a YTD basis has also delivered an exceptionally good performance. So all credit to the banking space, but like we talked about rotation, I think in the banking sector, what we're at least seeing in terms of flows at our end is rotation from the larger cap banking stocks to the small and mid cap banking space. So, especially in the large cap private sector banks, a lot of them are near their 52-week highs or have done exceedingly well. So, there is a lot of money that's taken. There's a lot of investors who are taking money off the table and rotating into smaller mid cap names. So, even though we continue to stay positive on financials, I would think that there is a sort of a valuation gap that is now emerging between the larger and the smaller banks. And I would think that the play in banking, at least what we are recommending, is basically rotate out of the ones that have performed and are in the larger cap space to the ones that offer a lot of value in the small and mid cap space. So that's how really we're looking at banking.
Gaurav, going into next week, what do you think will be the primary riding factor for the market amongst all the big earnings, the policy, and of course global markets?
So I think we've got two basic triggers to look out for as we go into the markets for the next week. Obviously, domestically, we've got expiry coming about. I think the market seems a little overheated in the F&O space. So I think that is going to have some sort of implication on our markets. But the bigger and the most important factor that really we're keeping our eyes open for is the stress test results of European banks that come out on Friday. Now, I think this is pretty much why, this kind of explains the uncertainty and the nervousness that we're seeing in global markets, especially Europe, and the fact that. But I think if you look at the cues, you've got gold coming down, you've got the euro hovering at about 1.3. European markets are consolidated, not really panicking. And Morgan Stanley's view is really that we expect some, positive outcome, or we expect positive effects to emerge from the results of the European banking stress test. So I think that is going to be an extremely important deciding factors on how global cues play out, and expiry will be an important factor on how the domestic scenario plays out. But I think these are the two big events that one needs to keep their eyes open for. And just another thing, in hindsight, if you look at the U.S. markets, U.S. financial stocks made their lows just after the U.S. banking stress tests were released. So one set of investors do believe that you may very well see some of the European banks also making some of the lows. I mean, making positive moves after the European stress test results are out, and we very well may be seeing the bank lows as of now, and only see banks moving higher from here. So these are the two big events, but I think there's really no way to really predict what the outcome will be. So I think it's just wait and watch.